Our first conversation for the show this morning, with the fight against inflation paying off gradually in the global economics, GDP growth remained resilient but fragile in the first half of the year as the labor market remained tight. As such, this is recessionary fears that lingered in the early part of this year. Meanwhile, the Nigerian economy remained resilient in the first half of the year despite major headwinds confronting households and businesses in recent months, with the oil sector returning to growth and the telecommunications and finance subsectors supporting the non-oil sector's growth. Nigeria's economy has been projected to grow by 2.92% this year compared with the 3.10% it recorded last year, as the nation's economy is set to be veering from the watershed point. Somi Akoshile, an investment analyst, joins me now live virtually to give us more insight into the performance of the Nigerian economy in the first half of the year. Mr. Akoshile, good morning. Many thanks for joining us on the program.
Yeah, morning. My pleasure.
Okay, let me start my question, or let's start the conversation with this question. You've seen the recent development in the country. Everyone is, should I say, being hit by this development, and everyone is also expressing anger, frustration, and the likes. Let me start by asking, what is your reaction to this, and what is the ripple effect of this development on the overall economic performance?
Okay, thanks once again, right? So to be honest, right, it's been a bumpy ride economically over the past few months, particularly looking at the first half of the year, right? We've seen a number of reforms amidst, the already stifled, economic performance, right? Especially with respect to inflation. Obviously, looking at what happened yesterday, right? Another hike in fuel price to about 617 naira per liter, and in some cases, above that. Well, obviously, that may not be unconnected with recent reforms by the present administration, removal of fuel subsidy, and also FX unification. Well, was it a surprise what we saw yesterday? Really, for enlightened folks, right, analysts and economic stakeholders, right, it wasn't a surprise. Looking at the fact that yes, subsidy has been removed, the oil sector has been downstream oil sector has been deregulated, right. So it's expected that what we now pay, what we would be paying for fuel will be, reflective of global crude prices, looking at the fact that there is no value shortfall on that recovery that we paid by the government anymore. So marketers now have license to import fuel, and definitely will be paying at exorbitant prices compared to what we were paying before. And the obvious effect on that is further pressure on inflation, and obviously strain in consumer spending and disposable income of consumers and households. So obviously inflation would continue to tick upwards. Demand will be very much constrained, and obviously that would have a ripple effect on overall economic growth, looking at the fact that consumption spending contributes about almost 70% of the GDP composition, right? And if there is that constraint with respect to consumer spending, we expect that going forward, in addition to other macroeconomic headwinds, right? You have interest rates, borrowing costs at very much elevated levels, right? You also have some other factors, FX, liquidity constraints, also defined unification, collapsing of multiple windows into the annual window has been done, right? But in the last month, we've seen that knee-jerk reaction with respect to how the naira has depreciated further, which obviously is nothing new. It's expected that in the short term that that steep depreciation would occur, and obviously every analyst would allude to the fact that short-term pains in the short to medium term to reap long-term gains. So it's now a question of when we begin to reap those long-term gains. I think, well, what we are going through now is inevitable. Some will call it austerity right now, but I think it's just a phase we have to go through, and hopefully the fiscal authorities would be prudent, and wise enough to manage the situation, especially with respect to palliatives, increments in salaries, and other forms of factors that should come in place to cushion or ameliorate this effect.
All right, thank you so much for that insight. Now, with some of the macroeconomic fundamentals that you did make mention of, there's this projection that the country's economic output will grow by 2.92% for this year. What is your reaction to this?
Okay, well, I very much align with that. Obviously, so if you take a cue from Q1 2023 numbers, right, the economy, according to those numbers printed by the NBS, the economy has maintained steady growth for about 10 quarters, consecutive quarters rather, since we exited recession around Q3 2020, COVID-induced recession during that period. For Q1 2023 numbers, again, growth was well subdued, right? Primarily due to the cash crunch and the Naira redesign policy that was, I would say, economically speaking, it wasn't something that made sense, and we saw that ripple effect on major sectors of the economy. Agri sector, imagine the agriculture sector declined for the first time in about in decades, right? A decline of about 1% compared to Q4 growth of about 2.4% a year. So we saw trade also decline, and obviously, according to the IMF, Nigeria's economy is about 50%, informal, and we had that. And to be honest, right, the 2.31% growth was even above expectations. If you average forecasts, particularly from economic forecast on Bloomberg, you would have seen that the forecast for Q1 was very much lower than what we saw, and we've gone past the Naira redesign and cash crunch, and it's expected that the remaining quarters of the year, GDP prints higher, and I very much buy the idea of my projections are between 2.7 to 2.9. Also considering the fact that there's a steady recovery of the oil sector, even looking at the fact that as at Q1 2023, it was still in a contraction, I think, for about the 10th or 11th consecutive quarter. Mind you, it was a contraction of about 4%, and if you compare that to Q4 2022, where a contraction of about 13% was recorded, so you would see that there is that steady recovery, and that obviously not connected with the fact that oil production is beginning to beef up, thanks to the concerted effort of the fiscal authorities in curtailing the security concerns, vandalism, and the like. So a combination of resilience of the non-oil sector and positive recovery in the oil sector should amount to a steady economy, but despite headwinds of elevated borrowing costs and inflation concerns. I also mentioned earlier that the downside risk to that positive outlook remains the constrained consumption spending, looking at inflation, where inflation is now, fuel subsidy removal, The forecast for inflation is obviously not optimistic at this point, and projections are that we could likely see inflation get to about 27-28% by the end of the year. But I still believe that the economic outlook is still very much positive, and I think reforms from the current administration would, to an extent, be positive for some sectors, particularly manufacturing and trade sectors.